Welcome to the StockOptionAssassin.com's free market analysis video for swing trading options. This is Eric. It's about the lunchtime hour on Thursday, February 21st, 2013. I'm going to go over three things. It's going to be a quick video. We're going to first go over where we shorted the S&P, which we actually shorted a couple days ago, and why. And then also two plays that we're looking to potentially get in long on that I want to share with you guys. So first of all, what we were looking at in our market timing service for the S&Ps was obviously the market had kind of broken out here, and I've been looking at some Fibonacci levels with our members, and basically the market had this big retracement. This was from the September high of last year down to the November low, and then we kind of rallied and took off from there. So one thing we do is measure extensions of moves. So the extension of this retracement came up to the 27 extension, was at 151.76. So that was a pretty key level we were kind of watching. But then also, I'm actually going to switch to a weekly chart real quick so you can see this a little better. The other move we had was from the November low to this high in December, and then we kind of rallied from there. Let's switch back to a daily. You can see this a little better. I know it's a little bit congested there, but okay, so yeah, from the November low to the December high, we pulled back. We had a 618 retracement. We rallied on. So now we're at the 618 extension of this this kind of leg up here. And so when you put those together, 152.30 was a number that I was watching with our members. And last week, remember, we started to kind of rally above that in the very last part of Friday, actually this was Friday. We rallied up, and then the Walmart news came out about the the sales have been the worst in years and all this stuff, and so we actually took a short there. And basically, what I was looking at on the weekly chart was that we kind of started to peak above 152.30, and then we actually closed back in. We were right in between those levels there. And so we took a short on the S&P. We bought some March, I think it was the 154 puts. Monday, I'll be honest with you, Monday we started to break out. We were taking heat on those puts, but that level ended up holding. We had that huge reversal yesterday, and now we're kind of looking for further downside. So first target downside, you probably can get a little support around 149 and change on the SPY, but ultimately I think we're headed to this breakout level and that 27 extension of this move, which puts us at around 148 and change. At that point you may get down to the 50-day moving average, but I do think 146 is in the cards potentially. But again, it's not going to go straight down. I think you're going to find some support around 148, 149, probably get a bounce, and then see what the reassess there and look like, and to see if it's going to roll over or not, or if if support really kind of holds there. So that's my thoughts on the S&P. So what I'm looking for now, there's two plays that we're looking at with our members, and the first one is Verizon. And Verizon has been holding up extremely well. Earnings was, this was in January, so let's see, earnings are on the horizon here. We don't really have any earnings risk right now, but what we're looking at now is a weekly squeeze play in Verizon. So if I'm on a weekly chart, basically what's happening here is Verizon's been kind of chopping around. The $45 level has been pretty stiff resistance for the past few months, and what we're basically looking at, we'll call this the resistance level, and then we have this sort of triangular ascending triangle pattern kind of happening on the weekly chart. But the weekly chart is in a squeeze, and if this continues to kind of go up and maintain its average, you can see the market's down. As of right now, the market's down another 0.7%. But look what Verizon's doing. Verizon, I mean, this thing wants to break out. Now, am I going to buy some calls today? No, because I think it might be contained for the next, let's call it a couple days. This might not be something that we take a trade on until next week. What I would like to see is the daily squeeze to turn around. We have some other proprietary indicators we use with our members to help us, make some of these decisions. But ultimately, I like Verizon here. I like its consolidation. I mean, if you just ignore the market right now, this is a move up after earnings. you know, positive reaction after earnings. So earnings risk is out of the way for now. This thing wants to break out. 45 is resistance. We had that, you know, somewhat of a triangular pattern here. But again, the weekly squeeze is going to play out. Now, a squeeze typically lasts 6 to 8 bars, sometimes more, sometimes less, but 6 to 8 is what I look for. So if we look at how many weeks this thing could go up, if this went up, let's call it 6 weeks, I think we could easily test 47, if not 48, and potentially break out. And so this, I would be looking at this point, April options, something like first in the money, maybe first out of the money. But I want to see how Verizon holds up over the next few days. You know, I would love a pullback. I have the moving averages here. This is the 50 and the 200 are pretty much tied together here. A pullback to 44 or even, you know, 44 and change would be welcome. I don't know if we get that pullback, but if the market does come into that 27 extension we talked about, this may be worth a long. The other one I like is NVDA. In ticker NVDA, it's actually holding up relatively well. As you know, also it's down 0.2%. This is actually in a daily squeeze that is right now it's going down. So this one might need a few days, but also weekly squeeze moving up, squeeze is moving above, and this thing is maintaining you know, this pattern. We had earnings. Let's go back to the daily chart. Earnings were a few days ago, had a pretty decent reaction. You can see the 200-day moving average on the daily chart is kind of keeping this in check. I think any, you know, move down to $12, look for some sort of support around $12 if it gets down there, and watch this squeeze. If this squeeze can turn around, then, you know, I would be looking for this to break out as well. And again, a weekly squeeze can be powerful. If this thing can break out above, you know, the 200-day moving average, which is 1282, I think this thing could get up, you know, potentially retest some of these levels. 14, this is, you know, would be a big move for a $12 stock. So those are some of the names we're watching. If you're interested in learning more about the squeeze indicator and how we use it, and the other proprietary indicators we use to monitor these trades, and also if you want the trade alerts for when we do take these trades, take our 30-day trial. We have a reduced price on that. Go to the website if you're not there already. Click on the trade alerts tab, start the trial, get the trades, get the education, and we'll see you guys on the inside.